Welcome back, everyone. Please welcome on stage Remco Westermann, CEO of Media and Games Invest. Remco, please go ahead.
Hey everyone, so it's not Remco today, it's Paul, CFO of Media and Games Invest, let's jump into the presentation then, I would say, to page 4. So, brief introduction of also myself, Paul Echt, CFO of Media and Games Invest, studied law and finance, worked afterwards for a Silicon Valley startup company called Shopgate Inc., did some equity fundraising there, spent afterwards a few years in investment banking at UniCredit Bank, did some work with the CM team of Kepler Chevreux, but also provided quite some debt financing to pre-IPO companies. And then met Remco Westermann, our CEO and chairman, in 2017 when we refinanced the German bond of Media and Games Invest. And in 2018, then I joined the group, and since then I'm responsible for finance, controlling and investor relations. Coming also to the shareholdings on that page. So Remco Westermann, our CEO and chairman, still holds 29% and is a major owner of Media and Games Invest. And other shareholders includes Oaktree. They came on board on our latest M&A transaction, King's Isle, which we concluded in January 2021, which was a transforming one. And then we also now have Janus Henderson on board. They came in the latest capital increase, which we concluded 2 weeks ago. So we have two very strong names on our shareholders, but also a pretty strong free float where we have Swedish long-only investors like Skandia Fonder, Atlant Fonder, but also UK investors like BMO and also from Sweden, Didner and Church Fonder. So a lot of great names which will also support us further down the road. And therefore we are well prepared also for further M&A. And again, just concluded a 90 million capital raise 2 weeks ago. So we have a pretty strong cash register now available for M&A. Coming to the MGI in a nutshell. So the introduction of Media and Games Invest, it's a clear buy and build strategy. We're running the company in 2 segments. That's media and games. And we have done more than 30 M&A transactions now since 2012. We have a market cap of roughly 600 million. We're listed on Frankfurt Stock Exchange. Is actually how we started this listed story in 2018, and then also dual listed on Nasdaq First North Premier Stockholm in October 2020. And since then, also our share price has developed quite nicely as Swedish investors understand the gaming market much better than the German ones. And therefore, we are pretty delighted to be also listed in Stockholm. The group has more than 800 employees now. And the majority of the revenues is coming from our top 10 MMO games, where more than 50% of the revenues is coming from players more than 5 years in the game. And then on top, we also sell casual games and subscriptions. Our platform now owns more than 100 million registered gamers. And on our media segment, we have a reach of 111 billion ads, which we delivered in the last 12 months. So we have a pretty nice reach in terms of advertising to do efficient user acquisition for our games. And then we also serve 5,000 external advertisers, which is giving us critical mass to be even more efficient on user acquisition. In terms of revenues by region, North America with 61% is by far our biggest market now, followed by Europe with 28%. And as mentioned already, so we run in the company in 2 segments, where 53% in the first quarter came from the games segment in terms of revenues and 47% from the media segment. And in terms of key financial development, we will see a bit more details later on, but here we can see already that it has been a pretty good ride, very strong profitable growth over the last 6 years, with a strong average revenue growth in the last 3 years of 76%. Coming to the next slide, and here we see why we are combining media and games. So on the left side, it's a games standalone company. And a game standalone company for mobile advertising, typical game pays 10 cents per user. And in an advertising-based game can earn 2 euros per 1,000 ad views, which means that you need 75 ad views to earn back the 15 cents for user acquisition cost. While on a fully integrated media and games combined company, you pay 10 cents for user acquisition because you request much higher traffic volumes also for third parties, and therefore decrease the user acquisition cost. And you can actually double the ad income as you do everything in-house. 50% is very often taken by the agency, and therefore you just need 25 ad views to earn back the 10-cent user acquisition cost, which is a 200% higher efficiency. And that is really driving also profitability and growth for MGI. And that's also the main reason why we have been able to clearly outperform the market in terms of organic growth now in the first quarter. So on the left side, we see the media and games markets combined, which are expected to grow by 12% in the next 3 years. But on the right side, you see that we have achieved 38% organic growth in the first quarter, which was mainly driven by efficient user acquisition for our games, and at the same time also placing ads in the games. So we clearly outperformed the market. Looking now into the highlights of the first quarter, so here also in both segments. On the left side, the acquisition of King's Isle, which was the biggest to date, purchase price of 126 million, 2 very strong IPs, and a transforming character for us because we have adding 60% Ebitda on a pro forma basis. Both IPs, Wizard 101 and Pirate 101, which has been acquired, have well been above plan, but also our existing games like Trove, which was launched in South Korea, Echo of Soul became a big DLC, Arcage also released a very big DLC, driving very strong 97% revenue growth in the first quarter. While on the media side, we also did an acquisition, the acquisition of Liquid, which is a connected TV platform, and also launched the platform in Japan. Integrated all the companies which we have acquired over the last year on the media side under one brand now, which is Verve Group, and also we're growing the share of mobile games publishers within our media portfolio, and therefore we're driving 94% revenue growth in the first quarter. Looking a bit more into the MGI 2 segments in detail. So on the left side, game segment, there we did 27 million revenues and 10.9 million Ebitda, with a very strong Ebitda margin of 40%. While on the media side, we did 24.5 million revenues in the first quarter and 2.6 million Ebitda, which is an 11% Ebitda margin. And here we expect to grow to 15 to 20% within the next, or within the second half year of 2021 already. Coming now to the M&A strategy of MGI. So as mentioned in the beginning, it's a clear buy and build strategy, but also combined with very strong organic growth. And so we're buying mainly inefficient targets. Typical target size is 5 to 40 million. We fully integrate the companies. That differentiates us also a bit from other peers because we believe that we can realize much more cost and revenue synergies by doing that. And then the third pillar, that's really revenue synergies, so increasing organic growth, post-acquisition, which is done due to efficient user acquisition for the games, internationalizing the games, but also on the media side, selling the products globally and therefore driving nice organic growth post-acquisition. And our typical M&A strategy is that we have done also out of the 30 acquisitions, we did roughly 25 distressed companies, so companies with a negative Ebitda. And there we always had the rule that we want to earn back the purchase price, including transaction cost and burn rate within 24 months. Historically, we have been below 18, and we have also lined out some cases in our company presentations, which you find on our website. So that's a pretty strong pillar. But more important is for the future, and that's what we're focusing now, is also Ebitda positive cases, where we still want to be conservative, not paying more than 6 times Ebitda. Also maybe go to 8 or 9, but then there needs to be clear synergies so that we can achieve these multiples and stay away from bidding processes, and therefore our typical target size is 5 to 40 million revenues. Looking now into our M&A strategy, so what we see here, a clear shift from Ebitda negative to Ebitda positive cases. So we see the top 5 M&A cases which we have lined out here. It's 3 gaming companies, 2 media companies, and all of them actually profitable. Coming now to the financial section, and here we see in the first quarter financial highlights that we have grown the revenues by 96% year on year to 51.9 million, while we were driving the Ebitda and growing it by 127% to 13.5 million, which were increased because we increased revenues, but at the same time increased the personal expenses at a much lower rate, which were driving then an even stronger Ebitda growth than the revenue growth. while also adjusted EBIT grew by 173% to 9.3 million, and operating cash flow grew by 83% to 11.3, mitigated a little bit due to a working capital impact from the Liquid acquisition, but nevertheless still very strong operating cash flow. Looking into the summary of the annual financial performance, here we see that we have shown very strong profitable growth over the last 6 years, reaching now 166 million revenues and 37 million EBITDA on a last 12 months basis, showing an average revenue growth in the last years of 76%. We diluted our EBITDA a bit in 2019 as we also acquired the media companies there, which were then driving further strong organic growth also for the games department. So it was a good decision to do it. Nevertheless, we expect now to go up to 25 to 30% for the full year 2021 already in terms of EBITDA margin, as KingsIsle is just included for 1 quarter here, and also the media side shows currently strong increasing EBITDA margin. And that's what we see already here. So first quarter in terms of revenue was close to its all-time highs, reaching the 52 million revenues. And on the EBITDA side, we also closed the first quarter in terms of all-time highs, reaching 14 million EBITDA and already a 26% EBITDA margin, which also can be seen as a kind of guidance for the full year 2021. What we started also in the first quarter of 2020 was a segment reporting, and so to show more transparency also to the outside. And therefore, we have introduced games and media segments. On the left side, you see very strong revenue growth of 97%, combined with also a strong EBITDA growth from 5 to 11 million. And even even more important is also that we even increased the profitability from 36 to 40%, really showing economy of scale and due to increasing critical mass. On the media side, we also were showing very strong growth in terms of revenue, 94%, where we were also tripling the EBITDA from 1 to 3 million and increased the EBITDA margin from 7 to 11%. And here we target 15 to 20% for the second half year of 2021 already, as we're scaling the revenues quite nicely and the personal costs and the fixed costs are pretty constant, and therefore driving higher EBITDA margins now going forward also for the media segment. In terms of operating cash flow and CapEx, here on the left side, we see the operating cash flow development. So we started with 300K in 2014 and have reached now more than 30 million actually in the last 12 months, ending Q1. With a strong free cash flow of 25 million, which is achieved to a limited maintenance CapEx of 6 million on a last 12 months basis. That's what we see on the right side, which is further investments into our IP-owned games, so content updates, DLCs, but even sequels. And compared to our operating cash flow, it's still limited, and therefore we're driving a very strong cash conversion. And on top, we also have expansion CapEx, which includes investments into M&A, but also into new game IPs and new game licenses. And there we have the KingsIsle acquisition in Q1, which led to a pretty high cash out. Nevertheless, also invested into further organic growth projects like game IPs and game licenses. And in terms of net leverage development, so the risk profile of MGI, we see here that we have started with 7x in 2014 and then traded between 2 and 3 over the last 5 years, going up to 2.7 in the first quarter due to the cash out for KingsIsle. But now including the capital increase of roughly 90 million, we have pretty nice delevered to 0.2. And that's also bringing us already to our financial targets. We have set these 2 years ago already and want to grow with a revenue CAGR of 25 to 30%. Looking at the first quarter, we can clearly see that we have outperformed that quite nicely with 96, with a strong underlying organic growth of 38%, EBITDA margin 25 to 30%. Here we are within the target with 26. EBITDA margin target 15 to 20, 18% achieved in the first quarter, and net leverage is even below the target, but that will also increase as we will use some of the cash which we have now in the bank for further M&A growth. That already brings us also to the outlook for 2021 and beyond. So MGI has now announced the strongest organic growth pipeline to date, with 2 mobile games, Heroes of Twilight, Golf Champions, Desert Operations, one of the games which we're currently porting to mobile, Skydome, a PC MMO game, and our strong enterprise solutions also in terms of our software as a service part for our EdTech stack. And then yesterday also the IDFA solution has been announced, which enables us to really do efficient user acquisition, despite the fact that Apple introduced the IDFA thing. And yeah, I think that brings us already to the Q&A, and happy to receive some questions.
Thank you very much, Paul Echt, for presenting. Really interesting indeed. You epitomize the kind of M&A-driven machine with a clear strategy and clear boundaries on your strategy. Still, you showed an impressive 38% organic growth, citing efficient user acquisition and synergies between your verticals as driver of your growth. Could you elaborate a bit on that, how your media's vertical supports your gaming companies?
Absolutely. So it's two pillars for the game segment. It's really efficient user acquisition, which is driving a lot of organic growth, as we can do much better targeting, as we have a lot of data now in-house. And at the same time, we also have reduced user acquisition costs. And that combined with further content updates and bigger DLCs, as we have ramped up our game development department quite a bit over the last 2 years, is a very strong driver of our organic growth in our game segment. While on the media side, we also can place additional ads in the games, and therefore also seeing pretty nice organic growth on that end. And there is also a lot of new game publishers like Zynga, King, quite a lot of EasyBrain, a lot of bigger names which have recently joined also our platform and doing and monetizing their games within our software as a service tools. So placing ads in their games to monetize their games via ads, and that is also driving additional growth. And I think there's a lot of trust to MGI from these game publishers, because they know that we have the know-how in-house and really know what we are doing there. And therefore, they're deciding to do the monetization of their games with MGI.
Perfect, thank you. And speaking about M&A, how do you find your targets? Do you have a very structured process, or is it more sporadic? What does that look like?
So we are in the M&A field now for 8 years, having performed more than 30 M&A transactions. I think it's 35 now, all in. And therefore, every week we get 3 to 5 targets offered, but most of them we decline because it needs to be high quality, and we have a pretty clear strategy on that. So it should be MMO games or also mobile games with an RPG focus, so that we have long recurring revenues. And we are pretty conservative, so we stay away from all the bidding processes. But as we have done so many M&A transactions in the game space, but now also on the media side, we have a pretty strong network, and people know that we, being a responsible party, doing good deals, but also fair deals. And I think that is really driving now our pipeline quite a bit. And therefore, we have more and more companies approaching us who want to join the MGI story. And the share is also a little bit our weapon, I think. So more and more people see also additional upside if they join us and maybe get partly paid in shares. And that's also part of the story, I would say.
Okay. And what do investors have to look forward to from MGI in the coming year? Any specific things you would like to stress a bit more?
I think it's further tailwinds in terms of organic growth. We have the strongest organic growth pipeline announced now in terms of game launches, which we had in the history, and combined with further tailwinds also from the media side, where we're seeing a lot of advertisers also from the travel industry coming back, increasing their the advertising budgets again. So I think MGI, with its positioning, is really prepared for strong organic growth. And then we also plan to do 3 to 5 M&A transactions this year. So I think there's a lot of things to come for the year.
Definitely a lot to look forward to. So I would like to conclude by, on a personal note, saying it's very appreciated that you have listed your company here in Sweden. Really interesting that you are, contributing to this hub of gaming companies and the investors that are active in this space. And once again, thank you and good luck on your journey.
Thank you very much. Bye, everyone.